All right, let's talk about accounting. For the next few minutes, we're going to pull back the curtain on what can feel like a really intimidating subject. But I promise you, by the end of this, you'll see it for what it truly is, the secret language of business success. So, picture this. You just had a monster month. Sales are through the roof, products are flying off the shelves, you're busy. But here's the million-dollar question. Are you actually making money? It seems so simple, but believe me, being busy and being profitable are two very different things. And answering that question, well, that's what accounting is all about. So what is accounting really? The first thing you need to know is that it's not about being a math genius. Nope. Think of it more like being a storyteller. It's often called the language of business for a reason. It takes all the noise, every single sale, every bill you pay, every invoice you send, and it translates it all into a clear, coherent story about how your company is really doing. And, just like any language, this language of business has a few different dialects. You use them to talk to different people for different reasons. We're going to look at the main ones because knowing your audience is everything. It tells you exactly which dialect to speak. Okay, this is a really important one to get right. On one hand, you've got financial accounting. The best way to think of this is as your company's official report card. It's for outsiders like banks or investors, and it tells them, here's how we performed in the past. But then you have management accounting. This isn't for outsiders. This is your internal playbook. It's for you and your team to figure out what's next, to plan, to strategize. So one looks back, the other looks forward. Then there's a more specialized dialect, mostly for insiders, called cost accounting. This is all about getting into the nitty-gritty. If you make anything, I mean any physical product at all, this is absolutely critical. It helps you set your prices, manage your costs, and it answers one deceptively simple question. How much does it actually cost us to make just one of these? Now, here's the cool part. No matter which dialect you're speaking, they all follow the exact same grammar. There is one golden rule, a single, incredibly simple equation that holds the entire system together. First up, assets. This is super straightforward. It's all the valuable stuff your business owns. We're talking cash in the bank, inventory on the shelves, the computers, the delivery vans, the factory machines, anything that has value. Next, we have liabilities. And again, nice and simple. If assets are what you own, liabilities are what you owe. This is the money you owe to other people, a bank loan, a bill from a supplier, you name it. And the final piece of our puzzle is capital. You might also hear this called equity. This is the owner's stake in the business. It's the money the owners themselves have put in. It's their skin in the game. So you put those three pieces together and bam, you get the golden rule of accounting. Assets equal liabilities plus capital. It looks almost too simple, doesn't it? But trust me, every single thing that happens in accounting, every transaction always comes back to keeping this one equation perfectly in balance. And this visual shows you why it has to balance. It's really just common sense. On one side of the scale, you have all the stuff the business owns. It's assets. Well, how did the business get that stuff? Where did the money come from? There are only two places. Either it was bought with borrowed money, which is a liability, or it was bought with the owner's own money, which is capital. That's it. There's no other way. So the two sides just have to be equal. Okay, now that we have that golden rule down, we can use it to avoid one of the biggest, and I mean biggest, traps in all of business, thinking that profit is the same thing as cash. Let's make this real. A company goes out and buys a new machine. It costs them, say, 10,673 euros. That cash is now gone from their bank account. So is the company now suddenly poor by that amount? You'd think so, right? But in the language of accounting, the answer is actually no. Here's why. That cash didn't just vanish. It was just transformed. The company swapped one asset, cash, for another asset, the machine. The total value of their assets is still the same. Then, what they do is spread the cost of that machine out over all the years they expect to use it. That process is called depreciation, and this is the key takeaway. Profit is an accounting calculation. It is not the same thing as the amount of cash sitting in your bank account. So, why do we go through all this trouble? Is this just an exercise for accountants? Absolutely not. This is where accounting stops being about looking backward and starts being about shaping your future. This is where numbers become strategy. And this quote just says it all, doesn't it? The whole point of all of this, the main objective, isn't just about filing your taxes. It's about giving you the information you need to make the right decisions at the right time. That's how you grow a business. Let's bring it back to a simple example. Let's say you own a coffee shop. You're thinking about buying a fancy new espresso machine. Your management accounting, your playbook, is what helps you predict how many more coffees you could sell and if it's a good investment. But your financial accounting, your report card, shows you how taking out a loan for that machine is going to look to the bank. You need both dialects to make a smart call. All right, so now that you've got these fundamentals, let's talk about the 3 big traps I see beginners fall into all the time. If you can just sidestep these, you'll be way ahead of the game. First, and I'm going to say it one more time because it's that important, do not confuse profit with cash. You can have a very profitable business on paper and still go broke because you ran out of cash. Second, please don't think of accounting as just a chore you do once a year for the tax man. Its real power is using it month in, month out to make better decisions. And third, don't forget about liabilities. It's easy to get excited about your assets and your sales, but if your debts are piling up, you're only seeing half the story. We've covered a fair bit of ground, but if you walk away and remember just one single thing from all of this, I want it to be this. Accounting is not about sitting in a room crunching numbers. It's about having the ability to read the financial story of your business, to understand what's working, what isn't, and where you're truly headed. Because once you can read that story, you're the one holding the pen. You get to write the next chapter.